Is there a bubble in the Indian stock market? For several months now, Indian stocks have been running hot. Sensex and Nifty have touched new highs. This year, Indian stock markets made a new record. They became the third most expensive market in the world. India was right behind the US and Japan. And this record-breaking bull run triggered FOMO among investors. FOMO, as you would know, is the fear of missing out. So investors felt that if they did not jump in, they'd miss an opportunity, a chance to make a quick buck. Now, there are all kinds of investors out there. All of them want to make money, of course, but some see stock markets as an easy route to exponential wealth. And for this, they engage in speculative trading, using complex instruments like futures and options. Apparently, millions of people are doing this now, and this has led to a frenzy. So Indian regulators are trying to tame it by introducing more guardrails and more rules. SEBI has prepared a plan. That's Securities and Exchange Board of India, SEBI. SEBI is India's market regulator. It is going after speculative trading. It is raising the entry bar for doing such trade. Here's what SEBI has recommended. The minimum contract size be raised. Earlier, it was $18,000. The new limit could be $24,000. And one more change has been proposed. Stock exchanges could be asked to offer fewer contracts. So the goal of this entire exercise is quite clear: to contain futures and options trading. And this is also known as derivative trading. What is that? Let me explain. Usually when you buy a stock, you buy it on the basis of its current market value, the asking price. That's what you buy it for. But derivative trading is like making a bet on how the price of a stock might behave in future. You're betting on that, on its future prospect. So here's what happens. In this case, in derivative trading, investors do not buy shares. They make agreements. They buy contracts. Contracts based on their prediction of how a stock might perform. If their prediction is right, they make money. If their prediction is wrong, they lose money. It's a gamble, and a risky one. And here is how one board member of SEBI describes it. Let me quote from what has been said. If you want to gamble, if you need diabetes and high blood pressure, then go into this market. So derivatives are not for everyone. There is a high chance that you'd lose your money. But that has not stopped people from gambling their savings on derivatives. And India has seen a huge surge in such trades. In fact, let me show you some more data. Last year, in 2023, Indian investors traded 85 billion options contracts. An option is like a promise to buy a stock at a certain price in future. If a stock reaches a particular price, you buy it. That's the promise you make. 85 billion options contracts. In 2023, they were traded in India, 85 billion. That's the highest in the world. In fact, India accounted for 84% of all equity options contracts traded globally. So who is driving this boom? The retail investors. That's people like you and me. They account for 35% of all options trade. And they're losing money big time. 90% of all active retail investors have suffered a big loss due to derivative trading. In March 2022, investors lost some $5.4 billion from derivatives. These trends are alarming. SEBI says that people are betting their household savings on derivatives. India's Reserve Bank is also worried about this trend. It says investors have been borrowing money to speculate in the market. India's finance minister has cautioned investors in the past about this. Here's what Nirmala Sitharaman said in the month of May, and I'm quoting. Any unchecked explosion in retail trading of futures and options can create future challenges, not just for the markets, but for the investor sentiments and also for household finances. Again, what has caused this surge? Well, two things primarily. First is the explosion of stock trading apps. They've made trading easy, even for complex instruments like derivatives. Thanks to these apps, it's as easy as transferring money, so more people are doing it. The second reason is the finfluencers. There is a rising number of content creators dishing out stock market advice on the internet. Retail investors have been falling prey to them. In July, SEBI ordered a crackdown. It warned 20 such finfluencers. But now it wants to resort to tougher measures. It wants to change the rules of the game itself. Now, there is no denying that the Indian investor has matured over the past decade. More Indians are ready to take risks instead of keeping their money in the bank. They're more willing to invest in the stock market, which is a good thing. But retail investors are also a vulnerable lot. And the allure of easy money can be a trap. So it's good to see the regulators doing more to protect their interests.
Across continents, one powerful news source.
Bringing you diverse perspectives on the issues that matter.
We go beyond the boundaries to give you that little extra about every sporting moment.
So thank you for making Firstpost 5 million strong. We're counting on your support, and you can trust us to bring you the news unfiltered and unvarnished.
One tree for humanity. One tree for Mother Earth. One tree for a future. Project One Tree, a News 18 network initiative.
From impeachments to inaugurations, if it's a political story, we are on the scene. The race for the White House is heating up.
Kamala, you're fired.
I say, bring it on.
If it's breaking news, we're live with the latest coverage. From the White House, the State Department, and Capitol Hill. We know the issues, but above all, we know the players to bring you the latest in-depth analysis on all the key stories that we're covering. I'm Eric Ham. Join me from Washington here on Firstpost America.
On the show today, the T20 World Cup bandwagon has moved across to the West Indies. What can you expect from this?
Hello, I'm Alison Green, coming to you from Durban, South Africa. Today we have a special show.
Start with a report on India's shifting nuclear posture. For the first time since India officially became a nuclear power.
Hello and welcome to Firstpost America. I'm Eric Ham, coming to you live from the nation's capital, Washington, D.C.